Remember, anyone bragging about their lifestyle business owner tax hacks online is just selling you something. They may have some smart moves and a little luck, but don't fall for it. And no, you cannot write off your G-Wagon because it weighs a lot. Hi, I'm Allie Jane Ayers, and this is Money Changes Everything. Learn, excel, or die. The most important thing most business owners overlook: the books. Key takeaways. For some business owners, entrepreneurship is just chaos dressed up as self-employment. As a business owner, you need to know all your numbers, your income, expenses, and cash flow. Writing everything off is spending beyond your means, sabotaging business growth, and not really running a business at all. There's something undeniably intoxicating about becoming your own boss. One day you're filling out PTO requests, and the next you're ordering a branded mug for your new LLC. You have the freedom, control, and ability to buy lunch and call it a client meeting. But too often, what looks like entrepreneurship is actually just a performance. When you strip away the aesthetics, what's left isn't strategy, it's chaos dressed up as self-employment. I don't know how else to say this, but you need to have a very basic understanding of cash flow and a balance sheet in order to run a business. If numbers make you want to bury your head in the sand, I'm sorry, I really am, but you're gonna have to learn how to work with numbers. You're here because you trust me. Remember, I used to be you. I didn't use Excel, by which I mean spreadsheet programs like Google Sheets or Numbers. Those are all interchangeable. Until my late 20s, I had to quickly become an expert. I will never be as fast or as grateful at using Excel as my business partner, a CPA who spent 10 years working for a multinational accounting firm, but I can get by. Skipping this step is not optional. It's the bare minimum requirement to determine whether you're making money or slowly bleeding out. Some of you may find this rudimentary. For others, it will feel impossible. I'm starting with the basics because in my experience, even the most talented people who run wildly successful businesses just ignore this super simple step. If you're generating a profit, you will, of course, at some point hire someone to do this for you. But I also encourage all business owners, no matter how big or small, to be able to build a basic financial statement for the businesses they run. I mean, hey, no one likes to be embezzled, right? Time to roll up your sleeves and get into the boring nitty-gritty. Start with the basic profit and loss statement. First, you'll list your income, every dollar coming in from clients and services in each row. Total up your income. Then below, list your expenses: software subscriptions, marketing costs, contractor payments, supplies, rent, whatever you're spending money on to keep things running. At the bottom, subtract your total expenses from your total income. That's your profit. This isn't advanced accounting. It's simple math that tells you whether or not your business is viable. Next, build a monthly budget tab. Set up rows for recurring monthly expenses and expected income. This will help you plan ahead and answer the important question: what is your burn rate? By the way, a burn rate is how fast you will run out of money. Basically, how much it costs you to run your business monthly and how quickly you'll consume the cash that you have in the bank. If you've got $50,000 in the bank and your business is losing $5,000 a month, your burn rate means you've got 10 months to either grow revenue, cut costs, or raise more cash before you run out of money. So the big question is, how much do you need to bring in to just break even? If this feels overwhelming, you're not alone. There are hundreds of tutorials out there to help you. The point is to start simple and get comfortable with looking at the numbers regularly. You should also learn to track cash flow. Create a spreadsheet that shows when money is coming in, when invoices are paid, retainers, one-time gigs, and when money is going out. Just because you're profitable on paper doesn't mean you can pay your bills on time. Cash flow timing is everything, especially if you bill clients on net 30 terms, meaning that they don't have to pay you until 30 days from the invoice date, but you pay your contractors every week. Finally, build a quarterly dashboard. This can be as simple as 4 rows: Q1, Q2, Q3, Q4, and 3 columns: your revenue, expenses, and profit. Seeing trends over time helps you identify seasonality, pricing issues, or growth opportunities. You don't need fancy charts. You don't need color coding. You just need to be able to answer the question: are we making money? Is it consistent? Is it growing? Before I started a business, I never thought about quarters. Now my whole life is ruled by quarters, comparing this quarter to last quarter, taking quarterly distributions, paying quarterly estimated taxes, and setting new goals for each quarter. You won't have any idea if things are trending in the right direction if you don't know what happened last month or last quarter or last year. You can learn all of this Excel stuff in an afternoon, and once you do, you'll be far ahead of the thousands of business owners who have no idea what's going on in their business. There are quite literally thousands of free Excel videos on YouTube. Once you get the hang of it, I promise, Excel's kind of fun. One of the most baffling things I hear from business owners all the time is that they have no idea how much money they made last year or how much money they expect to make this year. I'll ask, can you guess? And the answer will be something like, I don't know if I made $50,000 or $200,000. I really couldn't say because my business and my personal life are so intertwined. This drives me absolutely crazy because people often think they're winning the game by writing everything off, when in fact, what they are doing is sabotaging their business growth, spending beyond their means, and not really running a business at all. Remember, anyone bragging about their lifestyle business owner tax hacks online is just selling you something. They may have some smart moves and a little luck, but don't fall for it. And no, you cannot write off your G-Wagon because it weighs a lot. I call this kind of bragging cosplaying entrepreneurship. No shade towards talented cosplayers, but it's basically an expensive hobby. You may feel savvy or better than your friends who have silly jobs where they can't write anything off. However, it's not clever at all if you can't tell whether your business is growing or dying. If you don't know your own numbers, you're not building something. You're just laundering a lifestyle beyond your means through an LLC. There are rarely happy endings here. This type of entrepreneurial cosplay is defined by tax debt, stress, emotional decision-making, and eventually business failure. And this is all based on a serious lack of understanding of how important it is to know how much money your business is bringing in and how much money is leaving in the form of expenses. The answer to knowing these numbers, you need to keep accurate and up-to-date books and records. Why bookkeeping matters. It all starts with accounting. What's coming in and what's going out. So many business owners I have worked with over the years just don't want to look at their bills. Part of this comes with a real fear. The minute you have clarity, you have accountability. Once you admit what you're actually making, you might have to make some hard decisions, like charging more, or realizing that your business isn't working and you don't have enough reserves to keep it going, or saying no to low margin work, or finally admitting that what you have is a job, not a scalable business that has enterprise value. And that's okay, but it should change the way you plan for your future. If you want to be one of those mythical unicorn entrepreneurs who makes more than enough money to support their lifestyle, sets their own hours, enjoys what they do, and seems to never be too stressed about work, then start acting like one. Get your books clean, separate your business and personal spending, know your revenue, know your profit, know what it costs to run your life and your company separately, and stop letting freewheeling chaos masquerade as freedom. So what exactly are the books? There are a few ways to approach bookkeeping, and all will come into play at different business stages. Keeping your books means knowing what comes in, what goes out, and what's left over. The books themselves are an up-to-date account of incoming and outgoing money. They also tell you if you are making a profit. Bookkeeping is the foundation of every good financial decision you'll make, from pricing your services to deciding when you can afford to hire help. Bookkeeping must happen at least quarterly. If you're not doing that, you have no business running a business. Sorry. How bookkeeping evolves. When you're just starting out, using a spreadsheet to track income and expenses is fine, truly. Make a Google Sheet with monthly tabs and 2 columns, money in and money out. Get in the habit of logging everything. It won't be perfect, but it will force you to pay attention. That alone can shift how you spend and price your services. Sign a new client that requires you to scale up your Canva subscription? Great. Now you know you can afford the upgrade if you just sign one more client. As things grow, move to accounting software. When you have more than 10 transactions a month, you'll need software. QuickBooks, Wave, Xero, they all work. If the idea of setting it up makes your eyes glaze over, that's okay. Hire someone to do a one-time setup. Ask 3 people you know who does their books, and I guarantee you someone will say, my mom. Great, take mom out to lunch. You don't need to be an accountant, but you do need clean data. Most software can sync with your bank accounts and categorize expenses for you. AI does have some good uses here, so the hard part is usually just getting started. When things take off, let's say you're making $100,000 of annual revenue, you'll need someone other than yourself to handle this. You should be busy growing the business and bringing in revenue, and someone should be creating reports for you that help you make good business decisions. A bookkeeper keeps everything organized monthly. An accountant makes sure you're filing taxes correctly and helps you plan for what's coming. Plenty of great professionals work with small businesses and solo operators. You'll probably recover their fee and tax savings alone, and you'll finally be able to answer the question, how much money did I make last year, with something other than a shrug? You don't need a fancy CFO, but you need someone who can tell you, hey, your profit margins are slipping, or you made more than you think, and you should probably be saving more for taxes. That kind of clarity isn't just nice, it's the thing that separates a cosplayer from a real business owner. Don't undervalue yourself or your business. It's not just that good accounting gives you clarity, it also ensures your business will survive. If you take the route of running bullshit personal expenses through your business and you defraud the government by getting your income as close to zero as possible to avoid paying taxes, your business is not long for this world. If you artificially show that you have very little income on your tax return, you are telling financial institutions that you are basically a bad investment. You are advertising that you aren't capable of making income and your business may be failing. One thing that shocks many entrepreneurs is their inability to get a mortgage. If you've been shady and try to zero out your business income, you won't be able to qualify for a mortgage because you need to show income to prove you can pay back the loan to the bank. You will also likely struggle to get a small business loan, contribute to your own future Social Security payments, convince investors to give you money, and a bunch more. Artificially showing less income is bad news. You may think you're smarter than the IRS by avoiding taxes, but you're really just creating a dumpster fire. You're literally saying to the world, my business is worthless. Imagine this. A consultant brings in $600,000 a year in revenue, but the business spends $562,000 to operate. That leaves $38,000 in profit, or just over a 6% profit margin. That might sound like success on the surface, that $600,000 number, but it's barely a business. The margins are thin, the stress is high, and the wiggle room for error or growth is non-existent. That's not a thriving business. I don't know of any city in America where $38,000 a year buys a nice lifestyle. Now, making $38,000 is okay in the beginning when you have startup costs, but I'm talking about the many of you who treat your business like a piggy bank. Cut it out. I say this from a place of love. You don't build a resilient, profitable business by winging it. You build it by knowing your numbers and getting out of the financial fog and into clarity. That clarity is what allows you to scale up. It's what helps you make confident decisions, understand your margins, and spot opportunities before they pass you by. It's the difference between reacting and leading. When you understand your revenue, profit, and your burn rate, you stop playing defense. You can price more strategically. You can hire before you're desperate. You can decide whether growth means more clients, higher prices, or better systems. You can start running your business instead of letting it run you. Cleaning up the books is not fun. It's homework, but it has to be done. Good books are how you stop cosplaying and start building something real. And here's my parting shot. Learn to live in Excel. You just might love it.